These are the points to remember for accurately trading or candle reading. So the very first point is you should always wait until the candle forms fully. You should not jump in middle of the candle. You should wait until the candle forms fully. Why? Because the candle may start in green and ends in red. So you will take up the losses. It's better to wait until the candle forms fully. So you must, before there are some people who just see a reversal candle at middle, and they will think that is that the stock price is going to go down, and they will enter. So you should not do it. You must know what is the trend that is going. Is it uptrend or downtrend? Where the if the reversal is there, then only it's going to be turned in directional other direction. So you must figure out what is the trend, then the trend reversal signal. So always, some people always do scalping tradings, like 1 second, 1 minute, 2 minutes, 3 minutes. That those people are, I don't know how they are making so much money. They seem so, but it's really really hard to make money at that time zones, because the candle patterns are nearly nothing accurate. That's some random numbers generated like that only it has. But you should not fall for that pitfalls that the other people say, make a $1,000 in a second, like that they will say. But don't fall for it. When it is in higher chart, higher time frame, like the majority of the time frame, day, week, month, in long term perspective, this works better. The weekly time frame works better while swing trading, and 15 to 30 minutes to 1 hour, this time range work better for intraday trading. So always wait for the so you should always wait till the candle finish, even in the longer time frames. So you don't have to take the very first trade. So oftentimes what will they, after the market opens, someone will be saying that after market opening 5 minutes trading for $5,000 profit. Don't fall for that too. You should wait until the market settle down at the support or resistance. Then you can make a good move from there. Even if you make money in beginning of the trade, that's not sure quite possible, that because it is very fast and it may turn very quick. So do not fall for these pitfalls too. Always wait for the pattern confirmation. I'm saying it again and again and again, which means that if you should wait. The Warren Buffett, the famous investor, said you make in stock money while you wait in the stock market. So you must wait for the full formation of reversal patterns or bullish patterns. You should wait for it. And it's also very important to know where the reversal candle or the pattern is formed. Is it in the nowhere in the middle of the chart, or it's at the base of the support or resistance? There are two main support and resistance. One is the moving average and other is the floor pivots. We will be sharing more about this in the upcoming videos. If another one thing is that if you are watching, the one candle is green and the other is red, the other is green and the other is red, you must at that time should be out of the market, because that market is not confident enough to make that such type of trade. You should get out at that time. You should not wait at green and red and green and red. You should not go like that. You should have consistency in trading. So sustained moves are result of combination of multiple factors. It is not just the one factor. It is not just the only crossing above the moving average lines. It is not about the indicator pay signal in MACD. It's not just about the one indicators. It is the multiple factors that goes into which have high probability of succeeding in your trade. New trend result in more likely trades. You should always wait for the new trend. You should not get in the trend which is going to end. Many of the people do that. I'm also in previous days I've done that mistake. That's good, but we need to learn from it. You should always wait until the new trend forms and then get enter the trade. The entry point is appears after the fall. If the high probability is near the support or resistance region, it is the higher probability of working it. So only trade at the time. This is our aim of the aim. We should do a simple trading strategy with less risk and more profit. This is what our aim is. So you must only trade enter or exit at the resistance or support. So always trading with the trend gives us a higher chance of success. So, and also the important point is to note that if the trend comes, it will all be green. If someone will say there are only the three types of market can move. It can move up, or it can move down, or it can move in sideways. No, that's not true. The market and alter anytime. So if it has to sustain even in an uptrend, it should always move some downtrend. So at merely what percentage of the time downtrend we can't observe is literally not more than 50% to 60%. Maybe the picture is not clear enough. The 50% level, the the counter trend, it should not move below the 50 level. That means you should get out at that time. So as I said, this is the chart of a uptrend. You can see that middle of nowhere there are many more of red candles. This is the good style of trading. You can see that you, you can see that this is off of this, and this is off of this, and this is off of this. Like that it should sustain. Like that it should sustain it. So these are the points that you remember while trading a stock.